Has this ever happened to you? You spot what looks like the perfect low of day breakout. You jump into the trade and boom, immediate reversal stopping you out. Today, I'm going to show you how to avoid these false breakouts by trading with actual market context. Without wasting any time, let's get straight to it. The first question we need to ask is, what makes a real breakout? Well, most traders get this completely wrong. They're focused on the wrong time frame, wrong levels, and most importantly, the wrong context. They only look at the lower time frame chart, spot a breakout, and jump in without understanding the bigger picture. This is exactly why most breakout traders fail. Look at this example. What seems like a perfect breakout on the 2-minute chart is actually a trap when you zoom out. But successful breakout trading requires 3 key elements: higher time frame context, key level recognition, and proper price rejection. Before we dive into examples, let me show you exactly how I trade breakouts on ES futures. My trading strategy focuses on 2 powerful tools: the high of day anchored VWAP and the low of day anchored VWAP. Here's how it works. If I'm looking to take the long side, I anchor a VWAP to the highest price of the New York session. For shorts, I anchor it to the lowest price. But here's the key: I don't just blindly trade these breakouts. I wait for price to interact with one of our key levels first: the opening range, initial balance, daily VWAP, New York VWAP, or the previous day's New York VWAP. Once I see a clear rejection or bounce from any of these levels, then I look for my breakout entry through the anchored VWAP. Let me show you exactly how this works and why these 3 elements are crucial for your success. First, pull up your 15-minute chart. This is where your trade actually starts, not on the 2-minute chart where most traders begin. We're looking for 3 specific things: overall trend direction. Are we making higher highs and higher lows, or the opposite? Pre-market activity. This sets the tone for the entire session. Key level interactions, especially with the daily, New York, and previous day's New York VWAPs. Look at this real example from my trading. Notice how price was respecting these key levels throughout the pre-market. Understanding this context completely changes how you'll view breakout opportunities. See how price was making lower lows and lower highs in the pre-market? This tells us that sellers are in control. But it's not just about direction. It's also about how price is making these moves. Now, here's where it gets interesting. Most traders see this and immediately jump in, but they're trading in what I call no man's land, away from any key levels. Without proper market context and key level interaction, you're essentially gambling, driving a car blindly. Instead, here's my secret to avoiding false breakouts. Wait for price to pull back to a key level. These include VWAPs. This is crucial because it shows institutional interest. The 15-minute opening range high and or low, where early session volume kind of clusters. The initial balance high and low, which is the first hour's range. Each of these levels gives us a clear reference point for our trades. Let me show you this in action. Look at this beautiful setup. Price pulls back to the New York VWAP, but here's what most traders miss. Look at the clear rejection, the candle structure, and most importantly, the market context leading into this setup. When we see such a strong rejection from a key level leading into an anchored VWAP breakout, that's your high probability entry. I only took 1 trade during this holiday week, making $597 across 2 accounts. Why? Well, because patience pays. When you understand market context, you don't need to take every trade. You just need to trade smart. Here's an action plan that I like to follow. First, I start with the 15-minute chart for context. This shows the bigger picture. Without this, I am essentially driving blindly, not taking the bigger picture into consideration. Secondly, I like to identify key levels, especially the 15-minute opening range, the initial balance, daily, New York, and previous day's New York VWAPs. Thirdly, I like to wait for a pullback and clear rejection because, well, patience pays. And then fourth, Only then will I consider the breakout, when all conditions pretty much align. Remember, it's better to take a few quality trades per week than multiple low probability setups. When you trade with context, your entire approach to trading breakouts changes. If you want to see part 2, where I go into more advanced techniques whenever I'm trading breakouts, be sure to subscribe to my YouTube channel so that way you are caught up with all the future videos that I upload. If you find this video helpful to help you better understand trading breakouts, please drop a like on this video. Thanks for watching, and I'll see you guys all next time.